I think a lot of people in sales view objections as a very negative thing because they can be a hindrance to the deal. But for me, I see them in a positive light because normally the objections are the main questions that almost everyone has. And until we answer those in a good way,
Hey, Brett Swarts here with Dan Palmer. We're welcoming all of you back, whether you're consuming the content. We appreciate everyone out there. Whether you're a real estate professional, whether you're a real estate fund manager, financial advisor, business broker, M&A advisor, CPA, we want to make this particular episode of the Capital Gains Tax Solutions and Build to Billions mini Deferred Sales Trust episode on objections that you might have and how to help you through some of these objections. And Dan Palmer, objections can be a big roadblock. People get excited, get some momentum going on our strategy, and then boom, there's some objections that come up. We're going to walk through a framework we've learned with brand builders with Rory Vaden, and also but apply it to the particular objections that we see. But Dan, what's been your experience with objections with deals that you've worked through with the Deferred Sales Trust?
I think a lot of people in sales view objections as a very negative thing because they can be a hindrance to the deal. But for me, I see them in a positive light because normally the objections are the main questions that almost everyone has. And until we answer those in a good way, they're always going to have a little bit of trepidation about moving forward. And so I choose to view the objections as an opportunity to better explain how the Deferred Sales Trust can really change the lives of our clients. And so, the ones that come up, it's an opportunity to go a little deeper, to explain things a little more fully, and to ease their mind. The worst thing that can happen is someone has an objection and they don't ask it, because then you're just plowing forward, trying to set the deal up. And they have this thing in the back of their mind that you don't know about that's making them hesitate, and maybe they just don't respond back to you the next time or whatever. But when they put them out there, it's an opportunity to really address kind of the key factors that might make them stumble over the deal.
Oh, so well said, and I couldn't agree more. And by the way, one of the things that Rory says is one of the most important skills, is being able to handle objections. And being able to handle objections is knowing which ones are worth addressing because they actually can be solved, and knowing which ones to avoid because they will never have a resolution. And the kind of the framework that we've been learning and working through is one where people have either like vague issues, right? Logical issues that are very pinpoint, very specific. And oftentimes I think it's important to make it very, very safe for people to have the objections, like Dan said, so you can overcome them, but also make it safe that hey, if it's not a good fit, no problem. And you really want to make this a win-win for them. And so, Dan, part of what before we dive into some of the objections is one of the things we talk about is the pressure-free release, right, if you will, right? Where they don't have to feel like they can feel safe to tell you these things, right? So what's a good way to say that, or do you want me to read kind of the script that we have going here?
Yeah, I don't have any of the notes in front of me, but I'll just kind of go off what I remember from it,
Sure.
and you can correct it with the actual. So it's just something very simple that I think it's structuring the conversation in a way that allows you to move forward. And by structuring it that way, it's basically asking them to honestly say yes or no, so at least we know where they stand. The worst thing is when we don't know where they stand, and we're moving forward thinking we're going in one direction, but they're actually internally moving in another direction. So it's something as easy as saying, hey, I want to make a promise to you that if this isn't in your best interest, or this doesn't seem like a home run to you, I won't try to force you into anything, but I also want to ask you, to tell me the truth, whether this is a yes or a no, depending on where you are at this moment. Something along those lines where you're straightforward, saying what your intentions are. I'm here to help you. I'm not here to hurt you. I'm not going to jam you into a bad deal. I'm not going to, just sell at all costs for my gain and your loss. But also, you have a responsibility to me, and that's to be honest and tell me the truth. And if it's a yes, or if it's a no, or if it's a maybe, to tell me, and I give you permission to tell me that. And when they tell me that, that's the opportunity then to overcome that objection and move beyond it. But you can't get there unless you give them the freedom to tell you the truth.
Spot on. Yeah. So well, I like that you said like home run, because that's key, right? We only want home run deals, right? If you're just trying to get base hits or doubles, even if you get, last night was the 18, inning Dodgers Blue Jays World Series game, right? If all we're getting is base hit and doubles, it's going to be hard to win the game. And even if you win the game, like these are long-term, these are big transactions, big stakes. It's not just like you're just selling a house and you're done. Like, there's an ongoing trustee, ongoing advisors, right? Ongoing wealth from maybe multiple generations. And so it's really got to be a home run. What establishes a home run? A, they have at least $1 million gains, $1 million net proceeds, right? Like they have a large enough gain, which means they have a large enough pain. B, it's at least $1 million so that it's substantial enough to sustain itself and have momentum for the compounding effect, right? So you have at least that, right? You have somebody who wants to invest, doesn't want to spend out everything, wants to live off the investments, typically the cash flow. Also, they're selling a business, Bitcoin, real estate, something of large consequence, right, for taxes. And so the taxable amount is big, it's sustainable, it's going to be meaningful for them and their family. So establishing that is really, really important. And then like Dan said, I'm going to say it another way here. After you've discovered their dream, they overcome, understand their obstacles and their pain points, you're going to ask them like a simple transitional question. If I could help you overcome your obstacle and achieve your dream, it sounds like this would be a home run for you, or could be a home run for you, or this could be very meaningful and impactful for you and your family. And if the answer is yes at that point, then you want to move towards and transition by saying something like this: super. Well, I'm going to share with you what we do and how it might be able to help you. If you like what you see and you feel like it may help you move closer to where you want to be, then go ahead and let's go ahead and get started today. But I want to let you know right up front that if you don't like it, that's completely okay too. I promise that I won't talk you into anything or convince you to do something that isn't right for you. My only goal is to help you figure out what is best for your needs. And my only real request to you is that you just let me know clearly one way or the other if you think it will help you one way or the other. Is that fair enough, right? Something along those lines. It just really kind of moves you into a position of sitting on the same side of the table with them, right? Rather than on the other side, which sometimes can either feel like a negotiation or like a sale situation. It's more of a come alongside of them and let's look at this together and let's figure out, is this really going to fit your needs? And, and you're looking at them, you're looking at the solution, you're looking at them, and are we the right team for this, right? And so that is so key before you dive in to the overcoming the objections. And then when they start to bring up the objections, and we'll talk about a few here if you're facing the Deferred Sales Trust and in ways that you as an advisor can overcome these, you want to be really clear to pinpoint the objection, right? Pinpoint the objection. And so you might even say something like this, like based upon, imagine you've already met with them, you already understand their needs, their challenges, the tax liability, the proposal there, and you're really just going to get a sense for, is this going to move forward? You might say something like this: hey, it sounds like based upon what we've talked about in the last couple of meetings, that this is a great fit for you. And it solves these challenges for you, and it helps you achieve these outcomes. At this point, is there any reason why you wouldn't move forward right now, right? So it's basically going for the close. And if they say, no, there's no other reason, great, let's move forward. But if they say, or they hesitate, you want to say something like this, and I'll give you the number one objection we get. Dan, it just feels like my CPA would know about this, and how do we know it's legal? So Dan, how would you first pinpoint that, and then how would we walk through, if you remember the if I could help you resolve, and then the creative solution, and then the testimonial, and then the leading question. If you remember some of these things, we'll see how your memory is here, and then we can work through it. And a lot of this, by the way, it's an art and a science. We don't want anyone to think like it's got to be this exact way. This is just a general framework that's helped Dan and I organize some of our thoughts along these lines and have kind of a system for it. But Dan, it sounds too good to be true. How do I just know? How do I know it's legal?
Yeah, it sounds like your main concern is the legality of the structure. If I was able to show you that this can stand up under the scrutiny of IRS audits, would that be something that would make you feel more comfortable about the structure? Okay.
Beautiful, beautiful. By the way, you see what he did there? So first of all, he just mirrored back what I said. Hey, so it sounds like your challenge is legal, right? The legal part of it. And then he kind of pinpointed it. I would add one other thing. Other than, is the DST legal? Is there any other reason you wouldn't move forward? So I'd add just a little nuance, other than, because they might have 2 or 3 others that you want to know of, and you don't want to just figure you overcame the one objection and trying to go all the way for the close when there's 2 or 3 that you need to cover else, right? So yes, sounds like it's too good to be, you feel like maybe it's too good to be true. You're not sure if it's legal, and you want your CPA to feel comfortable about it, something along those lines. Other than your CPA feeling good about it and the DST you feeling comfortable that it's legal, is there any other reason you wouldn't move forward, right? And so now move to the next one, Dan, which is the quid pro quo, if I could.
Yeah, if I could show you how this is legal, how it has a 30-year track record and stood up under the scrutiny of many IRS audits, would that make you comfortable enough to move forward at this point?
Perfect, exactly. If I could help you resolve your legal concerns, and he offered some hard evidence, which is great, which is key here, right? I mean, you don't, as an advisor, if you're a CPA or a financial advisor, M&A advisor, business broker, commercial real estate broker, listening to this, luxury real estate agent, you don't want to be, out there talking about something that has no track record, right? And so quickly, if you don't know this, thousands of transactions now going back over, it's over 28 years, close to 30 years, maybe like 29 years next year. And over 30 no change audits, state and federal audits, no change, no findings. It's literally batting 1,000, okay? And so, plus we'll offer the creative solution as well, but there's also IRS audit defense. But let's move to the creative solution. So, Dan, and I'll read this one because this one may or may not be as clear. Hey, I understand your legal concern. That is why our DST legal team offers a lifetime, no cost, 100% audit defense. So just in case you get audited, sir or ma'am, I want to let you know that this is a creative solution to help you overcome this. Like, if everything goes wrong and you have an audit, 100% is covered by the tax attorney. Now, your tax, we can't cover your tax. No one's guaranteeing your tax. If we do the transaction wrong, in the thousands of transactions, we never had a negative consequence or done it, the tax attorneys haven't done it wrong. But, so we can't cover your tax, but cover the audit defense on the audit side of things. So, and they have a 30-year track record, right? That's the creative solution. So we can offer that, right? It's already built into every single deal, but I think that is a great way to offer that. And then you move to testimonials, Dan, right? So testimonials, and so I guess quid pro quo and creative solution can kind of all be in one, if you will, right? But just kind of get those key fact patterns out. So Dan, what's like the testimonials and what's the power of that?
Testimonial is just a personal story from someone who's gone through it before you. What I like to tell the clients is, you have a trustee. That's the structure requires that, a third party unrelated trustee, which is Capital Gains Tax Solutions. A trustee implies trust. You have to have trust. Sometimes it's really hard to build trust, especially if it's like a one week till close or a 1 month till close. Brett, you do a good job of offering people to come and visit, because it is very important to get face to face, for them to see you, just kind of in the real world, interacting with people and having a conversation. But building that trust is very important. And one of the best ways to build trust is to bring a third party in who at one point had sat exactly where these clients are sitting right now, made the decision to move forward, and found that it was the greatest thing that they've ever done. And so now it's not me saying it, it's someone just like them who also exited a highly appreciated asset at one time, was terrified about kind of turning that wealth over to a trust and relying on a trustee to do the things that they promised they would. And then you connect the two of them together, and the person's like, I sat where you sat, and this is what I did, and this is how great it's been for me. And so the trust goes through the roof when you bring in a third party testimony to basically speak on your behalf. But they're, you're selling, and the client is trying to make a decision if they want to go with you. When you bring the testimony in, it's two equals. They're both in the same place and they had dealt with you in the same type of a relationship. So it opens their eyes and it also opens their hearts to say, okay, I'm willing to overcome this because now I have someone like me telling me to do it instead of a salesperson telling me to do this.
Oh, spot on. Nailed it. And so I'm going to give like a real live, bring this to life. And by the way, if you're the advisor, you're the CPA, you're the tax attorney, you're the real estate professional, like there's two level of client, two level of business, I'll call it business to advisor or advisor to advisor testimonial. Then there's client to client, like, you know, the actual client. So first of all, if you're listening to this for the first time, you're like, well, how do I know that I can trust that to work with you guys? Well, guess what? We have other financial advisors you could speak with. We have other real estate professionals. And in fact, we just have on our team, 25-year senior escrow officer. She just joined our team. You can speak with her, who's worked with transactions with us for 15 years. Of course, tax attorney, CPA, the creator of the structure, right? He's a CPA and tax attorney, right? So whatever line of work that you're in, 1031 exchange company, we have a great one that we work with if you're curious about that. We have that advisor to advisor, if you will, testimonial. So that's the first thing. If you're coming from this is like, hey, I want to potentially offer this to my clients, and I don't have other clients yet who've done it. This is the second thing. So we have other clients. We have clients that you can speak with as the advisor. Great. Lean on our clients until you have that track record with your clients. So we'll bridge that gap, right? That's okay. It's okay to lean on our clients for that. We want you to speak with them as well. So we want to get what's called certainty of execution here and certainty of being able to deliver. And that's through the client testimonial. And so I'll kind of read the way that we've crafted this for the legal one to bring it to life. And the key thing is you remind me of, right? So example, you're a top financial advisor, someone who manages a lot of capital. Hey, you remind me of David Young, who had the same legal concerns that you had when he first learned about the Deferred Sales Trust. You know, his background is pretty spectacular. He helped build with Bill Gross a company called PIMCO from 80 billion to 1.2 trillion. And he looked at this for 2 years, looking at the DST for 2 years with his legal team. He came back with two conclusions. One, the DST is legal, and two, that he would like to be a part of our inner circle of service providers to manage capital for our clients. Isn't that amazing? Right? Or, hey, if it's good enough for David Young and his legal team, after a couple years of due diligence, is it good enough for you and your team, right? So that's the testimonial advisor. By the way, I also like using that for the client as well, because the client oftentimes, some of them it's important to find out their peers. Some of them it's important to find out other advisors, like if they're really heavily, like their financial advisor, their CPA, like they're not so much concerned with peer-to-peer. They're more like advisor approval, right? Which is cool. I like that too. We like them both, but so know that you remind me of so-and-so who also wanted his advisor to say yes. And let me tell you about it and helped him. It was this advisor. And David Young, by the way, can still be part of the inner circle for helping that. And so that's the testimonial, which leads into the last part here, which is the leading question. Dan, do you remember the leading question? It starts something like this. At this point, you can see why people like blank took advantage of this. Do you remember that one? Do you want me to read it?
Yeah, go ahead and read it.
Okay, so then the leading question, right? So you get that and you kind of finish with this, right? At this point, you can see why people like David Young took advantage of this, even though they initially had your same legal concern, right? At this point, you can see even though he had the same legal concern, he did 2 years of due diligence, all of this thing, and he went forward. It sure seems like the 100% lifetime audit defense. You see how I connected the creative solution there. Thousands of transactions, perfect legal track record, and the fact that the DST has never been on an IRS watch list or has never been an audit trigger takes care of your concern. Would you agree? Right? So this is, and it should. I mean, that's overwhelming evidence. It's an opportunity for them to look and talk with. And by the way, if you're looking at this, you can go to capitalgainstaxsolutions.com and/or our YouTube channel to hear videos from David Young on our podcast, speaking on really literally all of this, right? And his journey to the legal confidence conclusion. By the way, David Young is not a CPA or tax attorney. He had his legal team look at it, and they operate as a service provider on top of financial advisors to kind of build out a fractional family office, if you will, for the wealth. That's another thing. It's a team aspect here. So that's a legal concern. Again, we covered the pinpoint question, the quid pro quo, creative solution, testimonial, leading question. And this is the kind of the steps to overcoming objections and giving you a framework to do this. Dan, let's touch briefly on one other objection, which I think is a big one, which is the trustee, right? Like, hey, man, like all of this sounds really good, but how do I trust the trustee? So let's do a rapid fire. We have 3 minutes. Let's do the first clarify the objection, do the pinpoint.
So it sounds like you're struggling with trusting the trustee to manage your wealth. If I could show you how this is in your best interest and how you can trust that the trustee is going to work with you, would you be willing to move forward, or is there any other concerns that you might have?
Good. So you covered the pinpoint, the quid pro quo, and then creative solution. This is one that would be interesting. I understand the trustee concern. That is why we offer you the opportunity to come to live events. In fact, we have one coming up, and we actually have one coming up in a week. Brett's going to be, I'll be speaking on stage. It's the DLP Capital event. Tim Tebow's on stage, Lloyd Reeb, John Maxwell, and Brett happens to be on stage too. How he got on that stage, we're still trying to figure that out. But
God still does miracles.
All we can say is that God does miracles, and He keeps blessing us. So we'll take the stage and run with it. But you can come meet with him and his family and his team and his clients, and Dan will be there too. And so that's an opportunity for you to get there. And then on top of that, they just had a live event out in Sacramento, a one-day event for Build It to Billions. On top of that, of course, we have client testimonials, right? And so we can show you all that. We have a lot of things to help you get with that, okay? And then let's get really practical. So controls is usually the piece here. Usually, okay, I trust Brett. Like, that makes sense. Like, I don't think, he's honest guy. He's got that, all that. You can do background checks, whatever you need. All of that's all clear and clean, great. And so, okay, cool. But what about the controls? Well, let me also let you know, you can joint venture partner with the trust. This is kind of the creative solution, where you can partner with the trust, post-close, and do an LLC to do your own deals, your own transactions. It's kind of like a self-directed IRA. If I can show you how we do this, how we set this up, and how although yes, you having to give us some controls for the approval of investments, really the trustee and Brett and our company, we're working alongside of you to form these investments, these real estate deals, these different opportunities. Would that be helpful? We have a third-party tax return preparer that does all of the audited books for that, right? We have Charles Schwab, where the funds are held. You have 24/7 access to view the funds online. Third-party tax attorney and CPA firm that does the audit defense and all that. So in other words, it's not just Brett as well. Like, it's sometimes people think it's just the one man and there's shop and there's nothing else around to give.
I also think a really powerful solution to that problem is to say, in order for you to defer the tax, you can't direct the funds because that's considered constructive receipt and it's taxable. So you do have to trust the trustee, but we have a policy that no money moves without your signature and your approval. And so no money will move unless you agree to it beforehand. And that's our policy so that you can feel comfortable with the decisions that we're making.
Perfect. I love it. That's perfect. So all of these things are a part of the creative solution. Testimonials, right? Now you go to the testimonials. Hey, remind me of Jim Orr, who had the same concerns, right? And Jim sold his property, him and Laura out in Pennsylvania, a self-storage facility, and had a huge exit, huge taxes to defer, and they had those exact same questions and concerns. And I'd like you to connect with him one-on-one. Would that be helpful? Nick Katzer, right? David Sloan, right? And you keep going down the line. Would that be really helpful? So connecting them with somebody there. And then the leading question, right? At this point, and assuming they might go back and talk to the person, right? And talk to the people, and you might have another call on the next one. You can see how all of these people, had the initial concern of the trustee, but you've talked to them, you connected with them, you asked them all the tough questions, and they all said, 10 out of 10 or green light, 5 out of 5, right? You can see why they move forward. And at this point, does that alleviate your concern, right? Boom, that's it. So that's enough. We have two. Maybe the next time we'll come out, we'll cover the fee one. But we just want to give you, the advisor, the ability to know that there's a framework for these objections. You can lean on our track record. We've got amazing clients and business advisors, money managers that we work with that you can lean on as well. And we're here for you to serve you. If you want to get connected with us, go to capitalgainstaxsolutions.com and schedule a one-on-one consultation with one of us, one of our team members. go to capitalgainstaxsolutions.com as well, and our YouTube channel, and get the book, Building a Capital Gains Tax Exit Plan. Appreciate everyone listening and watching out there. He's Dan Palmer, I'm Brett Swarts, and we'll talk to you again soon. Bye now.